Hey everybody, I am back. It is Saturday. Hey everybody, I am back and I've got volume. I always check the volume and I am alone, which is a lot of the time. So, welcome. Thank you to everybody in the chat. Good to see you, T&D Tesla, keeping us all safe and sound, and for all the support, and David Sloan out there. Appreciate everything you do. And tomorrow is our sponsorship day, favorite day of the week. So this is a new episode, actually. What happened this week? Kind of a recap of all the big news that you may have missed in the markets and cryptoverse and macro and everything else. In fact, I was thinking of coming up with a new name called CryCro, which is a combination of crypto and macro, but I thought it would sound too silly. Anyway, let's jump in. Edutainment, you guys know the drill. And of course, the story today, we're going to talk about a whole bunch of different stuff. We're going to look at some hardness factors for Bitcoin compared to gold. We're going to look at some charts, some projections for different assets, some NFT marketplace action, who's adopting, who's not, what's happening around the world with crypto. Look at some ZkSync era data, some memes, meme coins, more targets, and a little bit of regulatory update, some bank run news, and try to do it all in about 10 or 15 minutes. Let's start with Plan B. He is back. And Plan B talks about how the stock-to-flow model has been traditionally used to predict the performance of commodities like gold and silver. We'll be talking about gold today, based on the idea that the price increases as the asset becomes more scarce. And I'm going to do a little recap on that here as well this morning. And Plan B believes Bitcoin will hit a massive target of 100K after the next halving event, which reduces Bitcoin miners' rewards in half. And the prediction is in line with the stock-to-flow model. And he believes, actually, it could go a lot higher and increase to a value of 532,000 after the 2024 halving. That is crazy to even think about. But there's lots of crazy numbers in this session today. So let's jump in. Let's talk about how a lot of people say S2F is BS, i.e. it doesn't work, but it does. It does for many hard assets and commodities in particular. And those that disagree, who claim that the stock-to-flow model is invalid, look at this. You can see the way in which Bitcoin price pumped after halvings is no coincidence. And how they follow the stock-to-flow model very strictly. And Plan B predicts, again, big numbers. But if you look at the past and what happened after each halving, those big red pumps, and each one has been pretty much in line with stock-to-flow. It eventually catches up. Right now, you can see, just cast your eye on the last bit of green dots. That's the proximity to the actual halving, the months away. We are 12 months away, ladies and gentlemen. I predict the Bitcoin halving will hit around April 14th, 2024, which is actually 51 weeks away. But look at that little green dot. It's going to go up to that gray line before the halving, according to stock-to-flow. So let's see if this works. Again, let's talk about hardness though first. And I was looking for a chart yesterday on Bitcoin inflation. I couldn't find one. There are charts, but I needed the exact percentages. So I actually created one and calculated myself. By the way, anybody in Patreon, I will share this spreadsheet later, as with all my models. So, but it's just stunning. This goes out to 2140. When you look at the inflation rate, again, mind-blowing. So right now, we are at that 1.79% inflation for Bitcoin. And it's going to go to 0.83% in 51 weeks, ladies and gentlemen. That's why the miners are panicking. It's like trying to get as much of that juicy golden Bitcoin digital safe haven asset as possible. And then after the next halving, it'll go to 0.4%. And then by 2032, 0.2%. And I guarantee you, even 0.4%, 0.2%, people lose more than that amount of inflation every year in Bitcoin. Therefore, it is deflationary, and I've been convinced of that for a long time. And as I say, there'll never be more than 14 million Bitcoin. And here we are. This is hard. And when you compare this to other assets, it is also mind-blowing. So this is gold. I pulled up Q1 2021 numbers versus Q1 2022. and that's the amount of tons of gold available. And the year-over-year change is 4.31%. Again, Bitcoin, we know, went from 18.587 million to 18.92 million. Inflation 1.79%, mathematically programmed, and it's going to have in 51 weeks. I can't stress that enough. That will drive the price up, and that's the big message today for everybody. But if you want to increase the inflation of gold from 4.31% to 6% or 8%, you know what you got to do? You got to dig a little deeper. That's it. With Bitcoin, there is no digging deeper. It's done. It's fixed. And that's what has me obsessed since the year 2017. Anyway, let's look at Bitcoin cycles. And as you can see, I'm excited because my indicators triggered a big spike this morning, and it did. Bitcoin went up. But this is from P2P on Twitter. And he talks about how Bitcoin is programmed to go to $1 million. And I love this chart because I love circles, I love rings, I love Venn diagrams, I love anything mathematical. And yes, 300K could be the new 100K. Yes, we missed 100K last time around. We only got to 69K. Many people believe it's because it was so heavily hedged. There was so much paper Bitcoin out there that was traded. That put a lid on the explosive run. We'll see what happens this year. But again, we hit 69K last year. This chart says 68K. Sorry, it's in 2021. God, time flies. Many people believe we could hit 300K, including Plan B. He said over 500K. And then, of course, after that, 1 million. So you can see kind of the 3x development. Well, 17x in the first cycle, 17 to 68, called it a ballpark. 3x, 68 to 300K, even more, higher, which is interesting. So that could explain why we didn't get all the numbers that people expected in the last bull run. Either way, it'll be good, especially when you consider the scarcity. And I've been talking about supply crunch for 2 years now, but it's happening, and it's happening very fast, and things like bank crises really help. So according to this chart, you can see the Bitcoin balance on exchange per Glassnode, and it is tanking. That is the gold line. And if you go back to last time, or the very first time Bitcoin hit 30,000 in 2021, and there was about 2.8 million Bitcoin on exchanges. Today there's 2.2 million, and sometimes people have stuff on certain exchanges because they can't get it off. But the supply shock is clearly intensifying as we go forward. So this is another exciting thing. And by the way, only $59 billion buys it all if the price remains static. So let's talk about a piece from Arthur Hayes. He believes that as countries look out for their own interests, central banks of the global south will diversify their international trade income by increasing gold allocations and may consider as a suitable savings vehicle alongside gold. And he predicts, this is Arthur Hayes, that in the future there will be various currency blocks without gold reserve currency without global reserve currency hegemony, resulting in less demand for US financial assets. A lot of people are talking about this. A lot of people dismiss it. A lot of people believe it. But this would set up Bitcoin for a key role in trade and savings. And Hayes urges people not to see it as an either-or decision between the dollar and the yuan and gold, etc. in the coming years. But again, the world will conduct trade in a multitude of currencies and save in gold and save in Bitcoin. So that in itself is kind of interesting. And we'll see where it all goes. Again, I noticed since the bank crisis, there's been a lot of newcomer interest in Bitcoin. And there's still a lot of the people who were in Bitcoin kind of fell out because they felt it would fall lower, but it didn't. But let's look at what's happening on exchanges too. And here, I call this India off the charts. This is the crypto exchange web traffic since the summer of 2022, with the 10 most active countries measured by exchange visit traffic. And the US and Ukraine, by the way, are both down almost the same amount. I think US is 33%. Ukraine is 30%. Obviously, the regulators in the United States are trying to kill Bitcoin and crypto and, make it very uncomfortable and prohibitive for certain exchanges to operate. That could explain a lot of the downturn as well as the bear market, etc. But again, we'll see what happens here. Now, the real one I want to point out is the exchange volume in India is up 28%, which is stunning there. And shout out to anybody in India. It's 12:30 in the morning, your time, I think. So if you're still up watching, kudos to you. Let's look at some option action, which has proven to be absolutely gold this year. So this is the Bitcoin on the left, ETH on the right, option open interest out to March 2024. Everybody, drop a comment below why March 2024 is an important date. Let me know if you're listening to me. But again, this put call action, the call options are in green, puts are in red, and you can see they trounce the put action, which obviously is very, very bullish as we go forward, and lots of open interest across the board. In fact, I'd even go far as saying, if you look at September 2023, ETH looks incredibly bullish. And even out to March 2024, nobody is betting against Bitcoin and ETH for that time frame. Again, let me know why March 2024 is an important date. Let's talk about ETH since you're on the subject. Here, this is ETH NFT users down 85% in 30 days. What happened? Especially last week, big tankage. So the competition between various ETH NFT marketplaces, including like the names like Blur, OpenSea, and Lux, has been highly discussed recently. And despite initial success from incentive programs that increased trading demand, unique users have sharply decreased by 85% in the past 2 months, indicating that pro trading platforms are not able to sustain long-term market activity. And the marketplaces will need to focus on introducing new use cases to attract rather than competing on minor feature implementations if the Ethereum NFT market is to recover. And guess where they're all active now? Again, if anybody can guess, I'm not going to mention the name, but you know where they've gone. Anyway, ZkSync era as well smashed Polygon. Where did this come from? So since the launch of ZkSync's era and Polygon's ZK EVM, you can see one thing has happened. Actually, you can't even see. If you look at the dark blue area of this shadow graph, that's Polygon, and it's tiny. And you look at ZkSync era, it's massive. Huge growth in a very short window of time. We're talking 3 weeks to almost 200 million in TVL. While Polygon's ZK EVM has seen little or no adoption. And the growth, of course, as usual, can be attributed to a liquidity mining program and integration with popular DeFi protocols, as well, of course, airdrop farming for the potential token, similar to the approach taken by Arbitrum. However, the Polygon situation is different because we discussed this already. They already have their native token and they didn't offer a retroactive airdrop. So its success will depend on the applications it can deploy within its ecosystem. And, you know, I always think that if you offer people kind of free money to engage and gain traction, it's a bit slimy. So I prefer when chains don't do it and try to attract organic growth, not, hey, come get some free money, play with our system. So anyway, just my take. What do I know? Just a guy on the internet. Speaking of, what do I know? Pepe, the latest meme coin. It's gone from dogs to frogs. It created controversy in the cryptocurrency world after achieving a market cap over $100 million in a week. Early investors have seen significant returns, with one buyer turning a 0.125 ETH purchase into $2 million. Think about that. On the blockchain. However, this individual owns 1.4% of the total supply and cannot sell without affecting the market negatively. Think about that as well. 1.4%. You own that much of the supply of any token, you try to dump it, it could move the price quite a bit. And the rise of Pepe follows a pattern of meme coin price surges in the past. In fact, I tried to, the chart's so new, 5 days, I couldn't come up with any conclusions. But I did look at Bonk, which is another meme coin that came up a while ago about bonking somebody over the head. And that's holding up really well, which surprised me. I expected it to be zero, and it wasn't at all. It's actually having another resurgence. So anyway, be careful with meme coins. I don't support them or promote them. Just talk about the news of the week. Now, this also came out. This is the Ark Invest 2027 price estimate per share for Tesla. Now, this is stunning. And I'll go through the percentages in a minute. But if you look at their EV, it's $2,000 per share. And that is based on their Monte Carlo analysis. The bear situation is modeling a 25% probability that Tesla could be worth $1,400 per share or less in 2027. Remember, 2027 is only 4 years away. And the bull case, $2,500. They modeled a 25% probability that Tesla could be worth $2,500 per share or more. Again, a lot of it hangs around kind of the robo-taxi. I've been a beta FSD user for a long time. The improvements are literally going vertical. Probably a lot of it is looking at 150 miles driven of data by all the people. 150 million miles is stunning. Anyway, I do believe a robo-taxi could be a real thing. Let's look at what this means in terms of percentages from today. Okay. So a bear is only a 7.5x return. That's 7.5 times your money in 4 years. That's up there with Bitcoin over the last 4 years, pretty much. And this means a bull case. Well, let's look at the bear case, 7.5x. Expected case is an 11x from today. And the bull case is 1,415.95% or 0.15%. I can't remember. 1,400%. So that nice big fat 14, 15x, whatever you want to call it, is pretty staggering with a $2,500 price. But remember, before we get too excited, the skeptics will always say, well, robotaxi may never come to fruition. Also, production scaling, maybe Tesla will not be able to scale their factories and their production. Or maybe there's no demand for their vehicles. And what if Tesla has to continue pricing aggressively, i.e. reducing prices in order to sell their products? These are all kind of the bear market cases and Ark Invest bull market cases. And yes, I know Ark have been off a while, but you know, it's sometimes dangerous to say 2027. If they said, say, 2026 to 2030, maybe it could be tighter. But again, this is interesting and is in line. And remember, once that robo-taxi is nailed, the FSD, and each week I become more and more positive that they will nail it. Okay, I use it. I use it on unmarked roads, private roads, and it is mind-blowing what it can do, what it can see, how it can react, how it can avoid collisions, how it can sense danger that you can't even see. These are things that, unless you're using it every day, you can't see. So I think Elon Musk should give all the Wall Street analysts a free Tesla with FSD so they can monitor themselves. Now, the most boring stuff. Regulatory update. I'll do this real quick. 3 big things happened this week. One is MiCA. The EU passed their comprehensive crypto laws that made people like CZ quite happy, including a whole bunch of good stuff. But really, it's the first major jurisdiction on Earth to introduce a comprehensive crypto law. Ta-da! Kudos to Europe and everybody out there in Team Europe who is watching right now. Coinbase got their Bermuda license, and they're trying to get one in Abu Dhabi as well. And they want to kind of say, USA, if you don't support us, we're going to bounce. And that is the tragic shame. The US is killing innovation and letting this key part work just to try and control or whatever's happening. It just is completely absurd. But hopefully a new regime will come in, hopefully from the right, maybe the left. And I'm not either, but I know the left doesn't work. So maybe the right will work. That's my hope, but we'll see. And the third part is the US House Committee published a draft for stablecoin bill. Again, no biggie, but it does have the ability to put the clamp down on decentralized exchanges and DeFi, which wouldn't be good. But what they don't understand is you can't kill DeFi. People will figure out a way to use it, you know? So the more you try to kill something, the more popular you make it, okay? So let's talk about banking blues. They are back. The banking blues continue, and the slow motion run on the banks, especially the small and regional banks and mid-sized banks, experienced a $76.2 billion deposit decrease last week. That is big, and the decline highlights the fragility of the US financial system following a series of bank failures, and with the majority of the drop occurring at large and foreign institutions as well. However, smaller banks were not spared, and they saw the large lion's share of the deposits that went disappearing. Again, it's far from broken, but again, the Fed still want to have the foot on the throat of the US economy and everything else, destroy jobs, destroy everything, kill them all, whatever. We'll see. another backup for this data point here is this is the Fed's H401 balance sheet update showed a lot of banks are still using the emergency credit. The BTFP program, by the way, I'll add the video yesterday. I had a great conversation with James Lavish. I'll add the video here after this video. And we discussed all the stuff you need to know, why money is broken, and how you can protect yourself. So if you missed it yesterday, it is a very, very high alpha show. But here, again, the little black arrow on the chart shows that the bank run is far from over. Let's talk about the sad news as well that the Fed is creating. This is in blue, the number of companies with layoffs up to the right, and the number of employees laid off up and to the right. Of course, Q2 2023 isn't even reported yet, but so far in April, tons of big companies, I think Facebook, Meta are on their third or fourth round, Amazon, you've got consulting firms like Deloitte yesterday. It is hitting hard, and you have reports from the All In podcast saying things like, oh, this company's getting rid of a third of their staff because they have AI. They deployed a bot 6 weeks ago, and they have 30% more efficiency and effectiveness in how they operate. This is what scares me. And I worry that maybe sometimes these jobs will not come back. So embrace the beast that is AI. Brush up your skills. Focus on it. Don't ignore it. Don't consider it a threat. Face the music. Face the fear. As they say in Switzerland, heb de Sorge, if anybody knows what that means. Anyway, in Crude news, this is a big thank to Sanjay for sharing this one. This is the amount of oil production around the world. Again, we believe inflation is driven by the price of oil. And when you look at this chart here, you'll see who controls all the oil production. Saudi Arabia, 162 billion. Russia, 82 billion. Canada, 74 billion. Shout out to everybody up there in Canada. Iraq, 72 billion. UAE, 69 billion. US, 41 billion. And the US strategic oil reserves are nearly empty. Norway, 40. Kuwait, 36. Nigeria, 31. And Brazil, 28. A couple of interesting things happened with Norway. I know a lot of Scandinavians watch this channel. But, Norway is a huge oil producer, and they drive all electric vehicles, and they stopped trading crypto. 21% fall over the last couple of months as well. So I don't know. I think they're maybe using their crypto to buy Teslas. I'm not sure. Something weird anyway. But if you look at this, OPEC controls over 60% of the oil generated in the world. So watch that space. With that, everybody, that's the end of the show. Thank you all for being here. Thank you for hitting the likes. I get up at 6 a.m. and I prepare this. In fact, I started last night. And now I go back to work and I work on the Q&A for tomorrow, where I answer all the top questions of the week from Patreon, including some really, really complex ones. So thank you all for being here, everybody. See you all tomorrow. Thank you, T&D, for being there in the chat and keeping us all safe. And thank you